All right, the final session of this area is elements of financial statements. Mm, There are five elements of financial statements, as you can see: the statement of financial position, statement of profit and loss and other comprehensive income, statement of cash flows, statement of changes in equity, and notes to the financial statement. So, statement of financial position is basically a list that is all assets owned by the company and liabilities owed by the business, owed by the business, and in the equity, the capital of the company. Whereas statement of profit or loss and other comprehensive income, how much company made sales, how much expenses has been incurred, either company is in profit or loss, right? Statement of cash flow, statement of cash flow. It tells about the how much cash inflow companies have, right? How much cash came into the company and how much cash outflow, that means how much cash has been they have paid, right? Statement of changes in equity, changes statement of changes in equity is about the changes in the share capital, the share premium of the company, or the retained earnings of the company or the revaluation reserves of the company, right? All of the what are the changes, either it's causing is there a increase in it or the decrease in it. And finally the notes to the financial statements, that is the details of transactions occurred during the year can be found by the users in this section of the financial statements. Now we have some definitions here, right? Firstly, assets. Assets are the resources controlled by an entity for which it is expected economic resources will flow to entity, right? So we have two types of assets over here: non-current asset and current asset, right? Non-current assets actually are the resources controlled by an entity for more than one accounting period, and from which it is expected that economic benefits will flow to entity. For example, land, building, machinery, etc. Okay, whereas resources, current assets are the resources controlled by an entity for less than one accounting period, and from which it is expected that economic benefits will flow to entity, right? For example, the cash, the receivables, the inventory, vice versa, right? So far so good. I hope you got it till here. Then we have liability. What is liability? It is a present obligation of the entity to transfer economic resources as a result of past events. And again, we have two types of liability: non-current liability and current liability, right? So again, it is in present obligation. Non-current liability is in present obligation to transfer economic resources which will settle in more than 1 year, and more than 1 year, right? That is non-current liability. Now, what is current liability? Simply a present obligation which will settle with the outflow of economic resources, outflow of economic resources um, in less than 1 year, right? And finally, after that, we need to know about equity and capital. Equity or capital, it is a residual interest in the assets of entity after deducting all of its liabilities. That is what is capital or equity, and I hope you got it. And this is the end of the chapter.